Starting off with the spider, yet another lifetime high. Basically, we bought them, of course, on the 7th, and we had one last little spurt of volatility, and that pretty much ended on April 21, and it's been by and large up ever since. And the VIX is about a quarter of what it was in the mayhem of early April. We've gone from around 60 to 15, so quite the sea change in the environment out there. It's still a very narrow rally, more and more narrow all the time. Here's the equally weighted S&P divided by the normal S&P, and as you can see, this continues to degrade, meaning that the equally weighted, all across 500 stocks is weaker and weaker compared to the Metas and the Googles and so forth. So it's not stopping lifetime highs, but under the surface, basically fewer and fewer stocks are doing all the heavy lifting. The diamonds, DIA, is up about 2/3%, and getting close to a lifetime high there. We had a little dip a couple of days, and then shook that off, and it's now back to challenging the lifetime highs. And as I said, small caps leading the way. IWM, which until about here was a really cool analog, that is long past. We've just been a straight shot higher, all this pent up energy being released, blasting higher, deep into this pattern and not really caring about the overhead supply. So this is up not quite 1%, and not near lifetime highs, but contemplating them. At least we're in the same zip code now, whereas we were vastly below them a few months back. Semiconductors also having a pretty good day. SMH looking to a lifetime high close there, and a lifetime high on an intraday basis. It tends to be still concentrated into the likes of NVIDIA. There are some stocks which, unlike NVIDIA, aren't at lifetime highs and are still mildly interesting setups. I'm still hanging on to the AMD, and will continue to do so provided it is up cross above 147.75, that red dashed line that I put down there. It's having a good day, and the Micron up just a little bit compared to the rest of them, and it has. Let me see. Let me just show this gap. Bang! There's the gap right there. It sealed that gap in a little bit more about 8-9 days ago, and we're hanging out below that zone. Like so, this was the big gap that happened way back in almost exactly a year ago. Now, ARK, the lead fund of Kathy D. Wood, is doing pretty well today, up about 1.5%. As you can see, it is like this sawtooth pattern. Higher lows, higher highs. This does seem rather lofty. You can kind of in your mind's eye just sort of trace a line. It seems to be getting near what is, even if this is a steady cycle higher until the end of time, this is about as high as it tends to get before it eases back again. But I will say, if you look at the ratio chart of ARK versus the cubes, that is, how is ARK doing versus the NASDAQ 100, it's doing better and better. It had been doing just wretched for a while, but ever since here, back in about 2.5 years ago, 2.25 years ago, it's been hammering out the space, which means nothing more than it stopped underperforming the NASDAQ. It really kind of bottomed out with its awfulness about a year ago, and it's been kind of making it for lost time since then. So ARK is definitely basing relative to the cubes in terms of its own performance. Got a little bit of a scare yesterday because Costco, I was short, and it went zipping higher after the close. And since we're not in earnings season, I was wondering what that was all about. They came out with some of their latest sales data, which was very, very strong. And the stock blasted higher by 15, 20 points, something. That eased back all night. And for whatever reason, although the data hasn't changed, it's actually down. Costco's down right now. And we'll see if it can ultimately break the support level. It's been kind of chipping away at that for some weeks now. Costco, is far from a sure thing. Sometimes these rounded tops work out in terms of a drop. Sometimes they don't, like all along here. So we'll see what happens in this respect. But I'm still in the position, did not get stopped out because I really only trade daytime hours. So that turned out to be a nothing burger. DG, Dollar General, speaking of retail, still with this one. Got a stop loss right along there. As I think I mentioned yesterday, the stop loss could be more generous and be a whip at that gap. Especially as horribly as things have been going for the bears since April 7, I'm very conservative these days, very conservative. And so I'm keeping stops tight. So that's why that line's lower than it might normally be. I will say that I got bounced out of Dollar Tree. They also went zipping higher yesterday, and it held on to that gain. Nothing positive about the company per se. It's just they announced corporate they'll buy back their own stock in the open market, which I would remind you was illegal until 1982 for companies. But since then, companies have bought literally trillions and trillions and trillions of dollars of their own stock back. And that has been a aid to Dollar Tree. So still with DG, no longer with DLTR. Another item I'm short to good effect so far is FMC Corporation. This is down just about 2% right now. You can see how it's hammered out its own top there. Stop on this one, roundabout where that dash line is, 44.68 is the level above which I would scamper out of that. But that's behaving itself. And another one also down about 2%, HIMS, which is Hims and Hers Health. I think the PE on this is like 70 or so. Yeah, 69.8 close. And this is another good example of how the gap is much, much higher than I'm comfortable having any sort of stop loss. So there's the gap way up there. I've kept it pretty tight down in this zone, like so. So that's HIMS. Now, just about the only asset I've been very comfortably and enthusiastically bullish about in this very rich market is palladium. Now, I've been, generally speaking, a precious metals fan for a long time. Love my gold, love my silver. And then some weeks ago, I sort of stumbled upon something I never bothered looking at before, which is palladium. And it's having a very good day. We're up over 6% on the futures right now. So let's look at a couple of palladium charts. There's PA itself, /PA. And even from this distance, you can see we're having a very good run here. This is our third basing pattern in this long-term chart. You got 1, 2, and 3. This is a thinly traded market. It can be pretty wiggly and wobbly. We could easily see this fall for the next couple of weeks. Who knows? It doesn't necessarily just blast above the base and never look back. Because if we zoom in here, you can see, and it's harder with this. Like I said, it's a very thin market. Let's change this to a line chart. It's a dynamic little instrument, moves all over the place. But generally speaking, you can see this is a very good looking base. And I first started talking about this with you, I don't know, maybe 3 weeks ago or so when it really caught my eye. So this is having a good day, and I expect long term it'll continue to do nicely. One angle we could look at this is taking that same chart and dividing it by the US dollar index, PA divided by UUP, to see how it's doing relative to the dollar. And as you can see, it's doing quite well there too, basing there also. The instrument of choice here, really kind of the only thing running, is PALL, if you don't want to change trade the futures itself. This data doesn't go back as far, which is why that first base doesn't exist on this chart. This thing came about only around 2010. But here was the second base, and here's the present one, right, like so. And as you can see, to my point earlier about how wiggly this creature can be, we've really been banging around this range since October 2023. But in recent days, particularly here, we had a nice base form here, and then there have been this whole series of gaps formed to the upside. First here, and then up here, and then most recently just yesterday. So between yesterday and today, there's a nice price gap higher. Yesterday's high being that new price gap at 101.41. So palladium looking good. One other metal we haven't looked at in a while, but also is cruising right along, is silver. This was sort of my earlier love affair, SLV. We had based on this one nicely, but it too can do some head fakes here. You know, it dipped back into its pattern here, turned out really not to matter at all in the end. And we've been pushing above that lovely base like so. So, you know, where will this stuff be in a week? You got me. But in a year, I think metals will continue to do just fine. On On the subject of commodities, and I haven't figured out why on this one. This is a real puzzle to me today. Oil is weak today. The crude oil contract's down over 2% right now. USO's down about 2% naturally, like so. So oil not having a good day. In spite of that, XOP is up about 1%. Usually those move more or less in line because oil and gas exploration companies own a lot of the stuff. And if the commodity goes up, they go up. If the commodity goes down, they go down. But for whatever reason, this is being strong today. So XOP and I think also XLE up today, even though USO is down. But in the midst of all this bullishness, there's definitely a lot of supporting sectors that continue to feed the fire. Financials, here's XLF, looking at not a lifetime high, but the little bout of weakness we saw seems to have been shaken off. So 52.14, I would say, is the base on that ETF, short-term support. XLU, utilities, looking at a lifetime high close on this, and it's just a penny or two, but we are sneaking above this this little breakout zone. So fewer and fewer items having any passing resemblance to anything bearish looking. I would say, though, in passing, that this ratio chart here, I think, continues to be important. This is the spider divided by the TLT, that is, equities divided by bonds. And its failure here, I think, still counts, even though we're near lifetime highs now. This is some pretty bad damage here. I think we need to respect the fact that this uptrend, which goes back for years, did, in fact, get broken. So the damage is done. One last little mention in the few moments we got left. I don't hardly any of you probably watched the Rock 4 rollout last night. I watched it. But it was interesting, and Grok 4 is very powerful. And the cool news is that they've already said it's coming to Tesla vehicles. That is the AI itself. I don't know if that has much to do with Tesla's strength today. Maybe it does, because I think Grok 4 has been pretty well received. And in a way, anything in Elon's world gets reflected in Tesla stock, even though he also is Neuralink and SpaceX and XAI and the Boring Company and all the rest of it. But Tesla having a good day, up about $13, over 4%, which probably has something to do with Kathy's success today, too.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.